Welcome to Trading Nation. I'm Sarah Eisen. Stocks leaping higher Wednesday, but our next guest isn't convinced the gains will hold. We're joined now by Jim Paulsen, Chief Investment Strategist at the Luthold Group. Jim, nice to see you.
You too, Sarah.
So you describe yourself as cautious, not outright bearish. Do the strong action that we've seen in the last few trading sessions make you question that, especially in the face of mounting geopolitical tensions?
Not so much. You know, we've been going nowhere fast here most of the year, and I really think that this is a year where we realize the economy has changed its stripes, Sarah, from growing around 2% with 2% inflation and 2% something 10-year yields to where now it's probably growing closer to 3 with, I think, eventually 3% inflation and ultimately, you know, 3 plus 10% 10-year treasuries. And I think we need a valuation adjustment in the stock market to deal with that. We sold as high as 23 times earnings in early January, and that's just too high if the 10-year treasury is going to be over 3%, if the Fed's going to be continuing to raise rates. I think we're going to have to find a much lower PE multiple that can sustain a very different character in the economy, and then maybe the stock market can start to trace earnings again.
What do you have in mind? 15 to 20 times earnings?
You know, I don't know. I don't know for sure, certainly, but I've kind of had some things that kind of zero me in on around a 16 to 17 times trailing earnings multiple. Right now, we're about 20.5 times trailing earnings. And, you know, we could get there, I think, this year, and I think the bull will probably continue. We could do that quickly with another sort of panicky sell-off, maybe even to lower levels than we saw in February. Or we might just continue to do what we've done here of late, of up and down but nowhere, going nowhere fast, and earnings continue to rise so that by the end of the year, we might be pretty close to that kind of mobile level just with a flat market.
One factor that could trigger a correction or some type of decline as you see it is inflation and rising inflation expectations. But it does appear, for now at least, that it's somewhat contained and benign, at least from the Federal Reserve's eyes, which is important to investors. Do you see it differently?
I think there continues to be evidence that inflation is continuing to rise, Sarah. I don't see runaway inflation. I don't really think there's a big risk of that. But I do think we're moving wage inflation eventually up towards 3.5%, and consumer price inflation probably breaks 3% this year, in my view. Look at, it's not just wages. They're going up too, but it's what's happening with commodity prices. Crude oil today just hit a 3.5-year high. Inflation expectations in the bond market are close to 3.5-year highs and rising. You've got the ISM price surveys for manufacturers and service sector that's gone to a 7 or 8-year high here in the most recent release. The employment cost index has risen to one of its highest levels in the last several years. You're seeing core inflation that just shot up here a little bit again, and you're seeing some of that same thing around the globe. So I think just aggregately, you're seeing more and more evidence that inflation has changed its stripes and is headed higher. And what we're doing as a result of this is we're being forced to readjust interest rates and ultimately price earnings multiples in stocks.
Yeah, what is that going to do to earnings looking out a few quarters and into next year?
Well, I think that inflation can have a couple negative impacts, I think, on earnings, potentially. Earnings are probably going to be phenomenal. I'm very much in the camp of $150 share earnings this year. That's reachable with the tax cuts and global synchronization. But two things. One thing is margin erosion is starting to raise its ugly head a bit when some of the companies that have reported. I think we're going to see more of that with both labor and capital costs rising and commodity prices rising. You're going to see more companies experiencing erosion of margins, which could force Wall Street to lower estimates. I also worry a little bit about, we've had a pretty colossal increase in interest rates, both short-term and long-term, over the last year to 18 months here in the United States and around the globe. What's the lagged impact of that on global growth? We're already seeing a lot of economic surprise indices across international economies go negative again. And if economic momentum were to fade in the second half of this year, that also would affect Wall Street's estimates for the year. So a couple things, both of which really come about from higher inflation, could affect earnings.
So how do you protect yourself as an investor? What do you recommend?
Well, one thing is I'm not convinced the bull's over. I think this is more a pause, and then maybe we'll restart again in 19. So I don't want to get completely out. But I do think there's things you can do. Just real quick, you can move away from the United States. I don't think overseas markets have near the issues that we have here, where they're not as highly valued, probably don't face as much inflation and rate risk, for example. You also should maybe raise a little cash. The Federal Reserve's paying you some money on that now, and you might as well take advantage of it. I'd add maybe a commodity ETF, direct exposure to inflation-sensitive securities in your equity portfolio, for example. I might look at some hedge fund exposure. Doesn't give you great returns if the market's going to go up 20%, but may give you very good returns in a flattish market overall. And I'd look at the capital goods or sectors. Technology, industrials, materials, energy, a lot of those are inflation sensitive. I'd also put in the financials as a hedge against higher yields overall. And then if the market does hit another air pocket yet, Sarah, then you can use some of that cash and maybe the commodity ETF to go back in a bigger way towards equities.
Got it. Good strategy. Thank you, Jim. Nice to talk to you.
Thanks.
Jim Paulsen from the Luthold Group. Thanks for joining us and watching Trading Nation today. I'm Sarah Eisen. We'll see you next time.